We had the rand spiking from 6.96 all the way to 7 rand 20 yesterday. Settled back a little bit this morning around 7 rand 10. What happened to the rand?
Good morning, Stephen. Well, we've seen this risk aversion, and of course, fears have mounted that we're probably going to see Japanese investors cutting back on some of their offshore investments, such as carry trades and the like. And of course, the rand has been one of the biggest beneficiaries of the carry trade in years gone by. So the market is concerned that the rand is vulnerable to that repatriation of funds from Japanese investors as they try and obtain as much cash as possible to start rebuilding the economy.
So now that we have crossed all those levels, do you think the momentum is to the downside for the rand? You had the rand pegged at 7.25 by the end of the quarter, and it looks like you could be accurate there.
Yeah, it looks like we're still on track there. We shot up to just short of 7.23 again this morning. We've come back, as you said. I think the important thing to mention is that the rand is now once again above its 200-day moving average, which suggests that momentum is now in favour of the rand bears once again. Of course, we had that rand bearish move early on in this year, and then we saw a bit of a recovery in the currency, but once again we've headed higher, and we still believe that the rand is going to weaken this year. Not an all-out blowout, but you're right, 7.25 is our Q1 end of quarter forecast, and in fact we see it going as high up as 7.80 by the third quarter of this year.
Well, while the market seems totally fixated on the rand dollar movements, how about the rand yen? Because we saw the yen hitting a high against the dollar earlier this morning. How's the rand been performing against the yen? Because Japan also an important trading partner.
Yes, absolutely, Steve. And I think that's where a lot of the action is actually at the moment when it comes to the rand. We saw the rand weakening sharply yesterday from about 11.50 all the way down to 11 against the yen. And really that is again a function of this repatriation of carry trades by Japanese investors. But that's the financial flow. There's also the trade flow as well, which I think is important to mention. Japan is our third largest export destination, and we export a lot of platinum and we export a lot of iron ore to Japan. And of course, as a result of this earthquake, we've seen the motor industry in Japan basically close its doors, and that doesn't bode well for platinum prices. Platinum has tanked quite aggressively, as has gold. And in fact, the only commodity that's really won out of this whole disaster has been that of energy prices. So we've seen that one of the biggest exports from South Africa to Japan has slumped. And we've seen that one of South Africa's biggest commodity imports is remaining fairly high. So our terms of trade is experiencing some deterioration, and of course that is negative for the rand. So we're still quite bearish about the rand's prospects against the yen in the short term, and only once Japan starts to actually rebuild its economy. Everyone's talking about Japan rebuilding its economy, but we believe it's going to take a few months before we actually start seeing those orders coming through for Japan for commodities, etc., to start rebuilding. It's not going to happen overnight. They're still basically finding their feet and establishing the damage. So in the short term, I think the yen remains firm across the board and the rand remains weak against the yen. But in the medium term, then we could start seeing the recovery, but that'll only happen when Japan starts to rebuild.
Meantime, we also had retail sales out here in South Africa yesterday. Slightly disappointing, 6.4% growth in January year on year. The market had been looking for a number north of 7%. So we seem to be losing a little bit of momentum in the retail sales side, Michael.
Absolutely, Stephen. And we spoke about it yesterday. We were expecting a bit of a moderation from the boom times that we saw in December. And, obviously the consumer in South Africa is still under a bit of pressure, still deleveraging debt to a certain degree. And although he is coming back from what we saw last year, it's going to take time for the South African consumer really to step up to the plate in earnest. And that's why, if we look at our growth trajectory going forward, we're expecting kind of 3.7 for the year as a whole. That really pales in comparison to a number of other emerging market currencies. And that's another reason why we're bearish on the rand. We think at a time where interest rates are going to start rising because of higher inflationary pressures, investors are going to start looking for more bang for their buck and investing in economies with good growth potential. And the fact that the South African consumer is still coming out of the doldrums, investment expenditure has slowed down post-World Cup, and government expenditure is sort of ticking by in a moderate fashion. We don't think that South Africa is really the shining light in terms of growth opportunities compared to some of its emerging market peers. So again, a fundamental reason for expecting a weaker rand this year.